Hello, and welcome to the Daily Talk Financial Podcast. I decided to rename the podcast again, so we went from the Johnson Financial Podcast to the Daily Talk, and now we are at the Daily Talk Financial Podcast. So we just combined the two, and hopefully we will stick with the name this time. I'm sorry for my absence the past few days, as I'm still trying to figure out my schedule for the podcast. I think I've decided to do it Monday through Friday every weekday, my bad. And to make up for my past absence, I may try and hopefully make this podcast last longer than usual. The crazy thing about having side projects is that you can't really stop working on it, If you stop on it for 1 or 2 days, you just lose your ability to do it. If you give yourself one excuse to skip out on a day, then you'll be more likely to give yourself another excuse to skip out another day. So if there's anyone listening who has a side thing going on or a side hustle, whether it is a podcast or whether it's exercising, anything like that, this is your reminder and your sign, if you need a sign, to get back to work on it if you have been skipping out on that extra side work you need to do. Okay? Don't be lazy. Don't go and play video games. It is time to buckle your belt and get back to work. If I can do it, you can do it too. Anyway, we have a short trading week this week and next week because of Christmas and New Year's Day. So it may be a ripe opportunity to scalp some premium from selling options because of the quicker expiration dates. My plays for this week consisted of selling a covered call on Rocket, which netted me $46 when it was all said and done. And also the market dipped huge on the Monday open. I remember waking up and seeing the big red line going straight down on the S&P, and there was no basis for the sell-off. So I remember the agent words of buy the dip. So I opened a put credit spread on the SPY, which netted me $15 profit. I also decided to open an account at ThetaGang.com and started logging my trades for everyone to see. I want to prove to people that profiting from writing contracts is a consistent strategy which allows you to leverage your shares and your money to gain slightly higher than average returns. And I'll put my Theta Gang profile link in the description so you guys can see my trades, and I encourage you guys to do the same with making an account on ThetaGang.com. I also put notes on all the trades I make so you guys can see exactly what I am thinking while I am making these trades. And for those of you who don't know what Theta Gang is, it is a type of trading strategy where you specifically focus on writing contracts, usually by selling the contracts to collect the premium and to reinvest that premium somewhere else, or really just use the premium that you gain for whatever you want. So for example, each contract is worth 100 shares, okay? So if I wanted to sell a $20 cash covered put on Rocket, for example, I would need $2,000 as collateral because 20 times 100 is 2,000, okay? I could sell the put to someone for $65 worth of premium. I then get that money, which is $65, and reinvest it into either blue chip companies, savings for a bigger play, or to buy options contracts with it. And if you don't know these terms I'm talking about, then I recommend you to watch Kamikaze Cash on YouTube. He makes great educational content for options beginners. Or you could sit down with me and have a one-on-one session where I teach you all the basics of options trading in the stock market. Actually, now that I think about it, that may be another idea for a future podcast episode. We'll call it Options for Beginners. Or I may just make separate educational videos on that using video editing. But if you don't know what I'm talking about, I will link some of Kamikaze Cash's videos in the description below so you can learn about the terms of options trading that I'm talking about right away. Okay? So it's a great content. I'll put it in the description. Anyway, the beauty about the Theta Gang strategies, though, is the beauty of consistency and the plethora of different ways you can make money when compared to the regular buying and selling of stock, or buying calls and puts. For example, there are plays you can make where you profit from a stock going down. Instead of buying a put, you can instead sell a call and benefit from theta decay. And theta decay is time decay. So the more time that passes, the more money you make because it degrades the value of the contract. Basically, selling contracts is a huge hedge for theta and IV crush. Whereas if you bought contracts, theta and IV crush can destroy your entire position. Other moves you can make is the butterfly and the iron condor, where you think the market may remain flat or neutral. And if you're neutral and somewhat bullish on the market, you can do something called jade lizards. If you think there will be a lot of volatility, you can do a strangle play, and that is by buying both a call and a put. And there are so many different moves you can do with options trading. It is insane. So what I'm doing now for the younger people who take my financial consulting lessons is that I'm teaching them options and Theta Gang strategies to help them build a portfolio over time and at a potentially quicker pace than usual. I would only do it if they have the correct financials to do so. However, if someone is deep in debt and don't have the surplus cash to invest, then I can't recommend them to do so. I also don't teach older people because, again, they have different situations. And for middle-aged people, I would only teach them once their balance sheet actually supports it. And if they have the determination to learn how markets work, if that's something they're genuinely interested in it, to the point they want to go beyond the buying and selling of stock. But I like to teach younger people how options work because they tend to be the most curious and determined people for a better life, specifically the Generation Z kids, which is myself included. From experience, they have a lot of hope and determination, which is probably what will make them the most successful generation next to the baby boomers. And I'm sorry, millennials, but you guys will probably go down as the worst generation to ever exist. Baby boomers and Gen Zers don't like you guys, and that's how it is. Anyway, I'm sorry I'm going on a bit of a tangent, but basically, Theta Gang strategies are a good way to build your portfolio and for showcasing consistency. And again, I just created a thetagang.com account so everyone can view my trades publicly from now and until the future. I also have a full list of my trades saved on an Excel sheet that I sometimes show my students just to showcase on how consistent it is. It's not a quick way to build wealth like the odds you see on Wall Street Bets, but it is the consistent way. Anyway, my favorite strategy for portfolio building has to be the wheel strategy, where you start by selling cash covered puts, and once you get assigned the shares, you immediately start selling covered calls on the shares. It gives you a nice weekly cash flow where you can do anything you want with that money. If you want to reinvest it, that's completely fine. If you want to go out and spend it lavishly, you can do that too. Also, it feels stress-free too. You aren't constantly checking your portfolio because you know that time only helps you instead of working against you. It really brings a peace of mind to your investing, and I like that a lot. Speaking of peace of mind with investing, the mentality of people who invested into Ripple right now is probably destroyed. For those of you who don't know, the SEC filed a complaint against Ripple, basically trying to declare the Ripple cryptocurrency as a security. The SEC basically defined a security as something that has two parts to it. One part being that people buy something, they buy an asset to make money with the expectation that the price will go up. And part two being that there is a management team behind that asset that is bringing value to said asset to increase the value of it for the people who are buying the asset. So basically, it's people buying an asset with the expectation of the price going up due to the management behind it. Okay? And because of this definition, Ripple can easily be defined as a security because Ripple is a cryptocurrency that is created by a company called Ripple. And they have a whole management and marketing team that is used purely just to increase the value of Ripple and to add value to Ripple. This complaint by the SEC, my bad, basically destroyed the value of the cryptocurrency, which must really destroy the excitement from the TikTok investors because they've been trying to pump this for over a month now. But this complaint not only brought down the value of Ripple, it also brought down the value of all the other altcoins as well, except for Bitcoin. But basically, if Ripple is going to be classified as a security, which it's probably going to happen, the SEC they basically run the courts. If you're in their territory, you're in their turf. Okay, so that means it will be taken off of a lot of exchanges like Coinbase, for example, which will dry up liquidity in the asset, which will destroy the value of Ripple in the process. Many of these Bitcoin hodlers think this coming regulation is a bonus because the price of Bitcoin didn't go down. They are arguing that Bitcoin is a good store of value because of this, okay? But here's the thing, especially with an incoming big government legislation, the SEC can easily say that Bitcoin is a security as well. Yes, the government under Trump classified it as a commodity, but with new people coming in, the government can change their mind as well, okay? So think about it. The first half of the security definition is already covered for Bitcoin. The fact that people buy Bitcoin with an expectation that the value will go up, okay? Not only that, but Bitcoin has an entire independent team of miners and people who verify the transactions within the formulas that the miners solve, who also get paid a fee, okay? Not only that, but Bitcoin also has independent marketers and hodlers as well, all working together to create value for Bitcoin, just like on how the Ripple company created value for the Ripple cryptocurrency. The only difference is that the SEC doesn't have a company to sue, so they will most likely go after the exchanges like Coinbase, for example. Many Bitcoin hodlers think that Bitcoin is immune to all of this, that Bitcoin is basically the ticket to free and easy money, but they forget that the SEC, they run the turf, okay? They run the game. Trump has been very kind to Bitcoin because he knows that some of his base is anti-government and anti-Fed, or many of them may actually own Bitcoin, and Trump doesn't want to alienate his base, so he just kept Bitcoin in regulatory purgatory, okay? But when Biden and his big government team comes in, it may very well be the doom for Bitcoin, which is a shame because I wanted to see Bitcoin fail naturally and not by the government, but it is what it is. So that said, I think that is all I wanted to talk about for today's financial daily talk or daily report. I did want to make it longer, but I may save that for the Monday podcast because today is Christmas Eve and I do have a dinner to go to. So thank you for listening, everybody. And if you find this podcast interesting, please leave a like and subscribe, and have a Merry Christmas, everyone. Thank you.